$9 billion stolen. That's what federal prosecutors say was taken in the Minnesota fraud scandals. And while most people were grinding out here for a 6% return on rental properties, losing sleep over interest rates and property taxes, criminals were buying entire neighborhoods in cash with your taxpayer money. Now the government's embarrassed and they're about to take it out on you. But here's the thing. While everyone's scrambling to figure out what this means for their real estate portfolio, smart investors have already been moving, not into more physical assets the government can audit, freeze, or regulate, into a completely different vehicle, one that generates monthly cash flow today, while building real equity you own and control. And in this video, I'm going to show you exactly what this vehicle is, how a small group of investors saw this regulatory shift coming months ago, and the massive opportunity hiding in plain sight, and how professionals are really protecting their wealth in 2026. Let's get into it. So what's actually happening right now? Starting March 1st, 2026, if you buy residential real estate with cash or private money, you're on a federal watch list. Title agents are now required to report you to the FinCEN, your name, your address, your social security number, and where the money came from. Wire transfers as low as $3,000 can trigger suspicious activity reports. I know legitimate developers whose bank accounts got frozen, not because they committed a crime, but because banks are terrified of the government. The review can take weeks. And in real estate, that's often enough to kill a deal. So everyone sees what's happening, and their first instinct is, how do I adapt? Some people are restructuring through LLCs, others are looking at partnerships, some are just hoping it blows over. And the problem is, nobody knows if any of that will work. You're essentially trying to navigate regulations that change every 6 months. Meanwhile, let's talk about the math, even if everything goes right. 60 grand down on a $300,000 property. After all expenses, you're cash flowing maybe $400 a month. That's an 8% return on capital you can't touch without selling. One HVAC failure, 6 months of profit gone. One bad tenant, 2 years. One federal audit, everything frozen. So while everyone's gambling on whether real estate survives this regulatory shift, there's a completely different way to build wealth from the same capital. One where you don't have to guess what the government does next. Let me show you what I mean. So if betting on real estate and navigating new regulations is basically gambling, what are the smart investors actually doing? Well, here's what's interesting. They're not trying to time the real estate market. They're moving capital into digital businesses, specifically e-commerce. And there's a reason for that. Let me show you what's happening in the market right now. E-commerce has grown every single year for the past 2 decades. Even during recessions, 2008, stock market crashed 37%. E-commerce grew by 3.5%. COVID, the Dow Jones dropped 37% in 5 weeks. E-commerce jumped 44%. And we're still early. E-commerce is only about 16% of total retail sales right now. That means 84% of retail is still untapped. The US Commerce Department shows e-commerce has grown every year for 20 years straight. Statista projects global e-commerce will reach $8.1 trillion this year. That's twice the GDP of California. So here's what smart investors realized. Instead of locking 80 grand into a property the government can freeze, they're building e-commerce stores that generate monthly cash flow. No property taxes climbing, no federal audits, no title agents reporting them, just products people are buying every single day. And they're not going to do it themselves, because building and managing an e-commerce store at scale takes time. Product research, listing creation, marketing, fulfillment, customer service. It's absolutely a grind. So they're partnering with teams that already know how to build and manage these stores, teams that have done this hundreds of times. That's the model. Let me show you how the math looks on that same $80,000. Instead of one rental property generating $400 a month, you can partner with my team that builds and manages e-commerce stores. Here's what that looks like. $50,000 gets you 2 fully managed stores on 2 different platforms, and my team will handle everything. Product research, store setup, listing creation, marketing, sourcing, fulfillment, customer service, all of it. But you own the businesses. Our team keeps managing operations for a share of the profit. Now here's the realistic timeline. The first 60 days are shop setups. We'll get your stores live in as little as 31 days. We'll start testing products, getting some initial sales. Around day 90, we can start to see some consistent results. That's when we're going to scale our marketing and listing creation efforts. Testing additional products, building momentum. Although our goal is to fully ROI you within 16 months, so that everything past that can be pretty much pure profit, We will actually pause our profit share and give you 100% of the store profits if you don't reach 100% ROI by month 17. But what about past the first 12 to 16 months? This is when stores can really start to scale. In 2025, our average partner here at Ecom Accelerator saw between a 12 and 21% net return to them from products sold on their store, all while our team handled the setup and management for them. Now compare that to putting $80,000 down and getting $400 to $500 a month if nothing breaks. That's a 5% return on capital you can't access. E-commerce isn't a short-term play. It's not a trend. It's a solid industry that keeps growing even during the recent crises. And it's projected to grow from $6 trillion this year to almost $9 trillion by 2030. And that's according to Capital One. So yes, you're generating cash flow in the first 12 to 16 months, but the real value builds after that. Because shopping moves further online, your store becomes more valuable every year. You're not just collecting monthly income, you're building equity in a market that's about to see massive growth. And you're doing it with just 1 to 2 hours per week of oversight, while we do the heavy lifting. There's no tenants, no maintenance, and no federal agents poking around asking where your money came from. That's the difference between physical assets and digital distribution. This is not a course teaching you how to do it yourself. It's not coaching where you're left to figure it out. It's a fully managed operation where you own the asset, collect the cash flow, and a professional team handles everything else, while you're working 1 to 2 hours per week at most. Approving high-level decisions, you don't have to manage products, talk to customers, or handle fulfillment. You just own a business that generates monthly income. The government is launching new regulations on real estate. Cash buyers are going to be on federal watch lists. Banks are freezing accounts, and your capital may be trapped in physical assets earning 5% if you're lucky. Meanwhile, e-commerce is growing every year, even during recessions, and it's still early. Now let me be clear about something. This is not for people looking for a quick flip, and it's definitely not for anyone who wants to get rich overnight. This is for professionals who understand leverage. People who see that real wealth isn't built by hoping regulations don't change. It's built by moving capital into assets you actually control. Assets that generate monthly cash flow, assets that are positioned in a growing market. So if you want to add a next income stream to protect your financial future, and you're watching the government tighten regulations on real estate, click the link in the description. It'll take you to a short video explaining exactly how this partnership works and what the realistic timelines look like. If it makes sense, there's a short form at the end. Book a call with our team. They'll walk you through the numbers, the structure, and see if this fits your goals. No pressure, no BS, just a real conversation. 2026 is going to be won by people who understand where capital should go. Don't be the person trapped into a property the government can freeze. Start building monthly income from businesses you can actually control. Click below and let's talk.